all sorts with Rocky Outcrop. I've got the YFI chart open with me here, just a throwback to stuff we were chatting about a couple of weeks ago to do with altcoins in the crypto market and whether or not they could explode with great big upside potential. We were talking about this one, and the technical setup basically came down to beating these prior highs. Is it possible to do it? Well, the story has been pretty remarkable with crypto over the last week, and I've got a poll open in the chat right now asking whether or not you saw how crypto played out this week, and that's all to do with the analysis we put in last week. We'll cover that again. If you're new to the channel, welcome. Thanks for joining us. Best place for analysis on the internet. We called this, and we did it really, really well on last week's show, so I think it's worth revisiting that because it was so good. We will also hopefully get to dive in to the hidden story with live person. I've got a goal in the chat right now. If you're watching this and recorded later on, then cross your fingers and hope that this amazing live audience we have with us here this evening gets us over the line, because if we do get there, we have an amazing positive story about live person which is hidden and needs to be shared with people so that they can understand what's going on. I've got targets on there. I think 3-star buys are going to be coming up in today's show. We're looking for some real deep value. The opportunity right now on this particular stock is so really incredible and nuanced. There's such a positive side at the end of the rainbow that I believe in as an investor and trader. I'm not a financial advisor, by the way, so this is all a do your own research show. But we're exploring this idea that I've got where we'll hopefully see a move down to 3-star buy territory, cha-ching, then a big rise up after that. But how do we get there? How would that happen? What's the story that's hidden behind it? Well, if we get to the goal, we'll explore the story in a bit more detail. Of course, it's always about bringing the value to everything that we do here in the channel. We're trying to bring the best value to the audience that we can as we do technical analysis. Why are we looking at this particular chart right now? And it's a technical analysis, classical charting pattern setup. Essentially, we're talking about markets over here that are putting in higher lows, looking to see if we can break above that territory, because there's a move up in store for this that could take it up to prices that are a solid 50% up from where they are just now. So that's a pretty decent reason to have this chart open, but the technical setup here is something to keep an eye on across markets, and there's a big reason for looking at that right now. Let's bring up a chart to give you an idea. This is the Ethereum USDT chart. Currently, the Ethereum price right now is $4,765. Amazing. That's hopefully going to bleed into the rest of the altcoin space. Just checking with the Ethereum Bitcoin chart. This is Ethereum versus Bitcoin. Now, we had this all charted out, and if you're looking at this picture here and thinking, my goodness, this is remarkably prescient, how did you get all of this in advance? Well, that's just what we do all the time on the show, honestly. So be sure to hit the bell and come back and enjoy it in the future and make some good trades like we've been doing. So we've done our move up towards targets that we talked about coming up here for a really significant milestone that we've been aiming for. So this is incredibly positive, good to see it. This is the total crypto market cap. You can see that it has moved into lovely all-time high territories. Lovely to see indeed. The fear in the market could be that there's some sort of pullback down to exist like within this channel, or perhaps somebody out there could be looking at this and saying, oh, we've got some wedge, or we have this really tight formation just here which could break and result in pullbacks and corrections and all sorts of stuff. But when you're in all-time high territory, it's nice to instead, well, you can obviously acknowledge the fear that the markets would drop down. Just put in, a little alert at the previous highs. It's not super rocket science difficult. Don't let anybody tell you that you can't do this stuff. But if you're just joining us for the first time, these type of tips will help So if you see the total market cap dropping below 3.6 trillion, you can have a different conversation, and it's not a million miles away from where the prices are of all this right now. But it's an all-time highs, and we could talk about targets that things could go to. So that's something I hope to do in the show here, is talk about what targets that prices could move to. Now, if you remember from the previous week's analysis, how we had a chart on here, which explained a lot of writing on that chart, right? I get it. Which explained a good deal of a story about US stocks, equities. And at the time, you saw things like all-time highs and how that was predicted in advance, and we then talked about the retest of this and where things would go next, and I was bullish when the market was predominantly bearish, and I was explaining the story why, perfectly explained last week, part of technical analysis. I used that as one of the key milestones along the way for explaining the reason why crypto would go up as well. It was really phenomenal stuff. Highly encourage you to go and check out last week's live show, because if you don't learn something like that, and I'm talking even the very best portfolio managers, fund managers, hedge fund managers out there, if you don't learn something from that video, then leave a comment down below and tell me, right? And I'm all the way up to the very top level. Very good stuff. So if we're talking here about this as being kind of a roadmap that we could have been looking to see a similar picture on crypto, not just from prices moving up perspective, but from the actual layout of my diagrams on the chart there. It's got this big line. Some people would call that chart a mess, but they'd be wrong. We've got a big line up here that said all-time highs. It was put there before the prices moved above them. It was just marking the previous all-time highs. That's all it was really doing. But then whenever prices moved above that zone, it was nice, and the audience and the market at the same time felt a sentiment shift. And looking back at it afterwards allowed people to be able to say, wouldn't it have been nice to have bought in anywhere in this territory? How would you have known that? And how could you have had the confidence to be able to trade that in advance, to take an investment? How would you get there to do that when everybody else is bearish? And it is difficult, but we explained that along the way, and then hinted that you would see, actually said it really, the same thing over here on the crypto charts that we were looking at with regards to the altcoin market. Now, this is just in advance. Now, there's no guarantees in life. I'm not a financial advisor. Always do your own research. There's no guarantees in life, but the sort of methodology that we've been doing that works quite well says that if the prices of Bitcoin, for example here, move above this green line, confidence will be restored, and you will feel that shift in sentiment the same way that happened in the markets, in the SPX, the traditional markets. Now, this isn't based on a previous all-time high. This is based on forward-looking technical analysis, based on understanding the most highly likely areas for liquidity to emerge, based on historic trends and statistical analysis. That's what it is, and we've been able to map out what's most likely to happen, like supercomputer geniuses that the human brain actually is. So we've done that, and this here line is very significant. If we zoom on into it and ask the question, where has the price come up to twice and bounced away? Bearing in mind that this line was drawn in far in advance it's right up towards that line. Fantastic. So it's been tried to be tested twice. This now happens to coincide with an area where I see this diagonal lines pointing up. Here's one just pointing up there. There's another one pointing up there, right? See those diagonal lines? They have great meaning, explained on the channel a lot of time. It's one of the ways that I personally have created a new technique for whatever. It's something that we do on this channel. Don't want to get into the nitty-gritty of explaining every little nuanced thing about it, but just to keep it simple, if we break above that line, then there's a good chance that the prices can move up towards the next line. Okay, so the question naturally becomes like, I don't care how you made the lines, Rocky, just tell me what the next price is that would be aiming towards. And that's, you know, if it went up in a straight line, it'd be talking about 138,000. 140,000 though, 141,000, those are the sorts of things you'd be looking at if it just took the sort of time that you would expect to do that. So, great. That's the next target. Call it 138,000 with confidence restored. Now that's fantastic, Bitcoin, Big Daddy coin, etc. And folks, we are going to take a look, as I said, at what we talked about last week to try and integrate and understand. And if we make it to our goal, which we have, wonderful, well done, folks. You did good there. Continue to send in your super chats and all the rest of it, and will be checking those messages. So you can do requests for technical analysis, by the way, and stuff too. So thanks, cool, awesome. This forward looking here, talking about 140,000 targets, we'll be going back to check out what we talked about last week. But we're going to measuring stick here to say, well, what percentage move up does a move up towards 140,000 represent on Bitcoin? It's big in terms of absolute terms, you know, thousands and thousands of dollars, but actually it's an 11.6, call it 12% move up. Not huge, not amazing, right? In terms of some of the other things that could move a bit more if confidence is restored across the market. And to put a magnifying glass on that particular market, let's hide these. That was some fun. That's some fun. There's nothing necessarily that you need to like go and check out there. Some people might be like, oh, better go scroll back and pause the screen to see what that secret technical analysis was there. No, don't worry too much about that. So this here is an index like SPX, you know, is for stocks and equities. This is one for the altcoins. It excludes Ethereum and Bitcoin and stuff, the big ones from the list, and just looks at a group of the altcoins. And this move here, which has recently taken price past its prior highs, could be the next move up. Could be the next move up, right? Now there's a danger, of course, that prices could drop back down, you know, as part of their zigzagging, okay, right? But I'm looking at the bigger picture here. This is the 2-day chart as well, for example. Look at the bigger picture here, and I'm saying, where could this go next? Because, as I showed you, the entire crypto market, if you put the index of everything together, you can see is in all-time highs, moved up quite nicely. It could also pull back, but providing that it stays at high and pushes forwards, we're looking for other things in the crypto industry to also make a move forwards. But the relative strength is very top heavy in the crypto market, that the top biggest assets have moved up in value more than the lower assets have, resulting in all-time highs on the large assets versus smaller assets not being there. So if the relative strength then amortizes and flattens across the industry because confidence has been restored in the market, then you could see a surge in some of these otherwise overweight, because they're weighed down or deflated, lower priced assets, which would be in the others chart. And as you can see, hell of a way to go. For instance, the whole thing could go up by about 50% or 40%. Compared to the 11% on Bitcoin, that's a big disparity. So there's a big opportunity if the market has confidence across it. That in itself is the biggest kind of threat, because it's like anything in life, right? You know, when it comes to the actual day, say for example, you apply for a new job, you're dead excited, and you go to the interview and you get the job, fantastic, you're offered the job, and then it gets to the day of the big job and you feel nervous when the days before you were excited. And it's a big deal when the actual time to actually commit comes in. Or, you know, people get cold feet before their wedding. Well, in the same way, markets get a bit of cold feet as they're making the decision to commit to something like hundreds of billions of dollars of value coming in to move up. Hundreds of billions of dollars. That's what we're talking about, right? So that's why it's important to get the whole story together. And that's why we're looking at this here. And then it brings up charts like, and this brings us back in the circle of the analysis, this one here, where you look at the prior highs and you say, look, if this breaks, it could push up, because there's such a low amount of price traded action in the past. Liquidity in this area is very thin. So the amount of resistance against a move up would be thinner, and it could happen quicker, which would see a move in that relative strength versus Bitcoin and see the other assets move up. If it went up 11, they would go up 40 potentially. That's kind of the Dow theory. So I'm just relying on theories that have existed for 125, 145 years. This is as old as the hills, but I'm applying it to the most modern markets out there, and it still works as well as it did for them. So that's your analysis, right? Boiled together, and what that would look like if I were to plot it out on a page, might be something like this, which is what we talked about last week, where I went through this different points about how we came together to understand what was happening in the markets. I spoke about the crypto buy the dip opportunity, right? That's happening at that time. And what did you see happen since then, of course? And we can just look at one of the biggest coins to get an idea of that. Just go to Ethereum, if that would work. And this is there's last week, so we'll measure from last week up to today, and that's a 30% rise. 30% rise in one of the biggest coins. And like I said, there's plenty of other ones that have been up way more, because the way that the exponential increase happens on the higher risk assets, and that whole risk to reward dynamic that exists. So many others are up far more than that. But you can see up 30% since last week, and that was based on really great analysis. Okay, so we're still looking at how we can continue on and what we could be seeing next. We do realize it could be a bit of a pullback, but we're looking towards other targets as well. And that story was here. It was this story. Crypto buy the dip opportunities, and we also spoke about live person, and we'll be talking about that in today's episode as well. That's an equity, so getting around to that soon. I will be checking the messages. Keep your super chats and donations and stuff coming in. I'll be checking the messages as I can when we get to that point in the show, and I'll definitely see what you've said, and I can't wait to see it. But and the way that we did this wasn't just like blow my own trumpet over here. We spoke about it at the time. We used risk managed approach, right? We used the scientific method in the sense that we looked for the false hypothesis, right? That to nullify, we instead of saying, how can I prove myself right? We took a thesis and said, how can I prove it wrong? Which is the only way that you can conduct yourself with real confidence that you're moving forwards safely in a risk managed approach. And that's what we did, and that's why it worked. And look, we did also other stuff, right? I don't want to get into that, but let's just then try to see if we can have a kind of quick little summary about some of the things. We also talked about the origins of football. Something for everybody on the show. So let's just say, like in summary, right? You know, we've got Bitcoin, which is at all-time highs. Okay. And we have Ethereum, which is up 30% in one week. We have total at all-time highs. We have others, right, with 40 hopefully it'll let me right now. Nope. 40% upside opportunity. We have a risk manage level. If you recall, I spoke about it on the total market cap chart, and I said if it dropped below the previous highs, that's a bit squiggly. Risk management level from the sort of total market explained how that would go. We used the rocky outcrop volatility bands as a way of finding 11% for Bitcoin. And we started with YFI to demonstrate an opportunity based on moving past a clear area of resistance into a low liquidity zone. And and Wi-Fi, by the way, I don't care about Wi-Fi. I'm just trying to show you as an example of one of the coins, and I can show you the like how on numerous other charts that there's a whole dynamic playing out in cryptocurrency right now. For instance, Solana here, which is quite like the others chart. Do you see how that is so similar? What? And when I said an interesting dynamic playing out here, and you can just kind of find the opportunities that speak the most to you, that you understand, that you can manage the risk on, where you can find levels that you say, oh, if it went past here, maybe I'm wrong. For instance, if you were momentum trading this at this point here, I would just write momentum trade there, because you're looking for a move to the next significant level up here. Then you might be looking to have your risk management sort of thing here, perhaps. If it was just purely based on the momentum continuing in the markets, you might actually be looking to try and see if you can buy a dip in here, or even in here, for a move that if you believe is going to ultimately break out towards all-time highs and so on. And you might be looking to try and take profit in here, where of course you had your previous major all-time high there. And this would be the area in this zone where the bears would be coming in at most often. Like I can't be going in such detail here 25 minutes into the show and explaining why, in technical terms, using decades of experience, why particularly there, whatever else. But I can show you that there is an interesting dynamic that exists in the market, and you might find opportunities that work well for you. So like there's here's one that's had a real hard time of it. Let's be fair, got this downward trend on the longer period time frame, but then you just keep seeing that if there's like a move past these zones, it leaves you into there's like this has had opportunity after opportunity where it's wanted to break out, but the problem here, like for instance, when it couldn't break out from this wedge properly to go up towards that sort of a target, then to form, when it couldn't quite achieve that, it had to come back down and retest this zone and move up again. It's had opportunities to move, and it hasn't been able to. And the reason is just so simple. It's because every time it looks to the left and says, like, what's next, what's happening, the confidence isn't fully restored in the market yet. This is the story I've been telling people for ages. So this is why these things are important. So if you want to see something like this turning around and going in and talking about bigger opportunities, then you can't ignore the fact that if this were to go past prior highs and come in anywhere into this range of price, if you're going to consider this to be like where, remember on YFI, I showed you YFI went up, that would be the area to look to. Or for instance, on the others chart where you're looking at where the breakout could come in at, you've got this whole meaty section here where it's like, right, yeah, that's really bearish, but that's been bearish, but it's been tough on that move down, that negative trend. I'm not blind, I see the negative trend, but I'm saying there's this whole extra meat on the bone, which leaves, if the whole market became super confident, this one here gets a 200% where the others get. So risk higher, as I explained, reward significantly higher, and you can find the areas that attune to you with that amazing dynamic that I've explained in the market, right? which is why I came back to that to end the story. So I've linked together a chain of things, right? Then also links together the start and end of the story to give you education and hopefully a little bit of fun and entertainment, and you hopefully enjoy my passion for the sport and my engagement with the markets, right? Because I'm trading this stuff live. Quite obvious, right? that I'm not like every other YouTube person on crypto world you've seen. Yeah, I know, right? Clearly, I'm actually properly engaged with the markets, right? So this is stuff, interesting stuff, and I enjoy it. And it's good to have you with me to enjoy it with me. There are opportunities that exist, and we want to see the messages that you've been sending in for 1 second, for 2 minutes, 5 minutes, whatever it takes, just a couple of minutes here to check the messages that you guys have been sending me here as I've been live. Had some great messages and super chats. You support the channel, you make me motivated, you've got great personalities, and I appreciate it. So then we're going to talk about live person. Before I just check the messages, because we have been doing a blend of checking in with what we talked about last week and updating people, let's just that was talking as me setting my claim that Scotland invented football against the English. You can if you're one of the English that believe that you invented football, happy, just put a comment in the message box and tell me how much you believe it. But I believe that we did it. I believe that we did it. Show me the receipts. All right. Anyway, we talked about some stuff last week, and we mentioned part of it being like this down at the bottom, talking about what we expected to see in the earnings call, and we also mentioned a key term in last week's show, runway. And I explained how I've worked out a model to understand based on hard data, okay? But you have to take disparate elements of data, hard scientific data again, not just like tinfoil. There's no tinfoil here, by the way. Have you noticed? Zero tinfoil. So I took hard data, facts, right, and not conjecture, speculation based, and worked out whether or not they had enough runway to survive. Because there's some rules on their debt, such as they need to have a cash position of $50 million. They had a current cash position at the end of the Q1 of $160 million, I think, and they were running at a loss. So that means you think, well, how long will the runway last? And then when does the debt mature, and can they make it towards maturity without the runway expiring? And then, of course, how confident are you that they will be able to renegotiate that deal of their debt and move forward the company and grow and so on? And you have to combine a package together to say this represents a sort of speculative deep value play. But what we're talking about now has gone from that and into a different phase, one that causes ripples and actually creates buy the dip opportunities. So I'm looking for 3-star buys, and I've got kind of a feeling, such as from the Rocky Outcrop Flash indicator, that we could be looking towards the 80s, 80 cents price on this. So we might get even a 20% discount from where it is right now, this stock, based on fear that exists in the market. This is the time when you look at the current live viewers, or if you're watching this recorded later and you see how many views this video has just down here, and you breathe a sigh of relief that it isn't millions and millions and millions and millions of people, because maybe the opportunities would be missed, right? Isn't it cool? So what we're looking at is a move to about 80 cents because of the ripples in the market that are coming from this news, which feels quite negative. One of the things that we didn't talk about happening was them renegotiating the deal for their debt and coming forward with that as the news in this earnings call. We didn't anticipate that right now. And in the earnings call, there was a bit of a tone conflict. I think you could, if you listen back and you've got your EQ rating turned up a little bit, right, you might feel this sort of tone mismatch. And one of the parts of it I explained was, of course, the element that we've moved from a phase of being able to sort of have to explain to each other why we believe that the company is going to be fine based on the hard data. And it was good because it involved that leap of faith, which let's admit it feels good, right? To believe in something and to be right. Yeah, it feels crap to believe in something and be wrong. It does, and there's a fear in us, and it goes along with it, anxiety. But when you believe in something and you're right, and you know that you're right, and that's what's called conviction, it feels good. Conviction feels good, and committing to stuff feels good, right? Like that. And then, of course, whenever you have to explain to that same people, like, hey, we've moved from a phase of it being speculative based on all the stuff that we knew, that we believed together based on facts, kind of, into now just hard fact world, where instead of having to say, this is why I believe it, isn't it amazing? And the next person say, I see it now too, magic eye, boom, brilliant. You can now just say, look at the hard data facts. Which is like if you're coming into town and saying, check out this dude, he can raise the dead, whatever, here I am, I'm friends with the Son of God, it's Jesus Christ himself, bringing him into town, and then everybody in town going, yeah, sure, we already know, we know the guy. And you're like, but he's the most amazing thing. They're like, yeah, we know, we've seen how he can do that already. He's like healed everybody around here. We're all drinking the best flavored wine already. And you're like, man, check out the wine that you can make. It's amazing. And everyone's like, yeah, we've got that wine. And you're like, what? And that's the phase that the company's in now. We're like, we know that it's great, and other people know it's great, and the hard data's out there now to show it. So that's a tone mismatch. But it also comes with words that people don't like. They don't want to hear words like dilution, right? Causes ripples. And that is kind of where we are with this. So if we look at how there are, there was an extra word was added in. It's the dilution word. That's what people say. And it sounds terrible. And that word may well help us get a big discount on these shares. And there's also another part of the story. One that people think is bad, which is great news for us, right? And here's two. Second part of the story that is people say is bad, but is great news for us. And it is they got to sell the shares. They got to sell the shares. They got to. That's the other one. The other side of the story. Okay, that's the headline, the story. Okay, that's the chapter title. It doesn't necessarily make enough sense to people, but we made the goal, so we're going to be looking at the extra kind of part of the story, which is number 2 there. That's the added value of reaching the goal. Okay, so and by the way, glad to say we totally nailed the predictions. The previous goal the week before was I'll make some predictions for how it turns out, and I was right with the predictions. So the just so that people can remember, people might not be able to remember last week. I know what it's like. You barely remember what you had for breakfast. Last week's a challenge. We predicted that we'd get a beat on the earnings. I said, the estimate there was 58.64. I said it would be up around about 59.5 or a bit more, just a bit of a beat, slight beat on that one. There wasn't much margin to beat because what they should have predicted, which you could say was wrong. I predicted that they would predict 57 point something, but they did 58 point something because they thought that. Was it actually at 58 whenever we were talking? Did they revise the estimates up towards the end of the week? They might have done, by the way. So that might be different figures. We got the whatever. Anyhow, we did a couple of predictions too, and they were pretty good. Okay, so what we want to talk about then is this story. But first off, we want to acknowledge that this thing, hey, it's at $1. Right, again, I can see it's at $1. That's great. We actually closed, the price closed at $1.01, and post market's currently $1. That's a big level. Again, I don't want to bore all the people who've watched the show a million times when I explain why $1 is a big level. If you're brand new here, you can probably intuit why $1 means something. But there's more but we probably can. But moving down below 95 cents does drop us into this territory. It does drop us into this territory, and a test of that, I think, is probably, is possible, right? I think a test of that is possible. This here is great. The story can easily go with a move above, 110 and so on. You're into this gap territory just here, this big gap here, massive one just there. And you could see prices move in the gap quickly to test areas, and that could be a complete pass. People could see the positive story and stuff like that early, and that could happen. But there is, but that's the key word, test, because what we saw here was, if we just take the replay button, everything in the markets is a test, right? Everything in markets is a test. Everything all the time. I know that sentence to brand new people doesn't make much sense. People who've watched my show an awful lot of time understand the nuance in the sentence. Everything in markets is a test. And this, as we see here, as the candles emerge on screen, I used the replay button. This moved down here, as you can see, right? Test. Just bear in mind that everything is a test, folks, right? Everything is a test all the time. That's the candle there, that black line I'm trying to show you. That's the candle. That's that next candle. I'm using replay mode so you can see it, how it played out. That's the next candle that came on. But did you see how the first one tested this whole purple box? Tested that purple box, pushed up, came down. Boom, tested at this line, pushed down below it, tested off the line again. This line being $1, by the way, that's again significant for multiple reasons. And if I just see it testing the line again, that 15-minute closing at $1, pop down below. If I could go back, I would, to that one. We tested that low and pushed down. I'm overusing the word test now so you can get an idea. We tested the dollar just there again. Tested it again and again. Every time the market was saying, do you want to buy above $1? If you believe it should be above $1, it's at $1 now, why don't you buy it? And then the test results came back and said, well, maybe we don't want to buy it at $1, maybe we prefer to buy it at 96 cents, maybe that's the sort of thing. So it's like, okay, cool. And what it's like is you've got like two people in a room where one of them is like Gordon Ramsay saying, come on, make your decision. What do you want? The red cake, the blue cake? Do you want the red cake or a blue cake? Come on, take it, choose your decision, make the decision. We got it, 3, 2, 1, let's go, what's your decision? And then you say, okay, $1. And then the prices go to $1 and it goes, right, okay, make your decision. Now, are you going to go up or down, left or right, up or down, left or right, 3, 2, 1, make your choice. And you're, oh my God, I don't know. What happens is the market moves to the $1, then it says, are you going to choose? Because if you don't choose, and it's like being with a really direct person, which I am sometimes, I admit, hold my hands up. Everybody in life can say they know somebody who's sometimes a bit too direct, and sometimes that person is me for the people around me. I am also around people sometimes who are a bit too direct themselves. And they might say something like, either you choose to buy it at $1 or else the price is going back to 90 cents. And you think, that sounds irrational. The person is being irrational in the room with me right now. They're being so hard line about it. Why does it have to move so much? Why can it not go to 96 cents? But that's the way the markets move. And they move because of these clear levels in technical analysis, right? Because this identifies to people where the buy and the sell areas will be. It's a circle, right? So incredibly simple, incredibly complicated to understand, and then you arrive back at understanding it the simple way again. But you have to go the full way around. You have to. So testing, everything's a test, like I say. And when you pass the test, right, at a certain point, You know, when they say, will you buy it? It's like, I'm telling you again, like this is the last time I'm telling you, went down to 97, it's like up. You buy it $1. This is the test. Come on, market. You say, okay, you buy it $1, or else we're going at 80 cents. Now's the time. You have to decide. Either you buy it now, none of this 95-cent stuff again. This is the last time. We're going to, you buy it now, or we're going to that. And the market bought it, right? Boo, pushed up. It decided to, the test happened and it pushed up. Now that took us to today, right? To today's pricing and to where we are now. And that test has come in, but everything is a test, if you understand. So it could, markets could, right, push up, come into this area of low liquidity, push up, test all of that, test that positivity, see if it wants to buy on again. But the people who want to buy it at 140 to go higher are the people who also want to buy it at 80 cents, right? Because I'm talking about, you know, you and say me, right? Those people. So not financial advice, like I say, just what you know. It's just this is the conversation, right? Welcome to it. So, and we're having the conversation. So pull up a chair. Don't be afraid. Join in the chat box if you've not already. Oh, sorry, by the way, everybody who's continued to put your messages, your super chats in, right? I will look at them. It turns out we've moved on to the LPSN section earlier. Sorry to anybody who tried to skip forward to get past the message section to land here, but here we are, we're doing it now. And what happens if the prices move down below 95 cents, right? What happens if the prices move down below 95 cents? And the test is when the market says at any time, you know, here, any time, if the momentum, if it says, right, it's at above $1, it's 105, right? You're going to buy it now, because if you don't buy it, we're not going down to, well, you would test $1 again. I don't want to get hung up on it, but that's a significant area. That would be a test. But you would have to test this area down below. Why? Because, I mean, look at this big gap down below. I mean, that's exaggerated, sure, but like there's a big chunky space there. And if I just grab this and move it up, that circles around the price, and that's what's called, technical term for this, an island in price. And this island in price has got a chunk of distance between it, which is what the gap was here. Now this happens to also be a Fibonacci level. That's right. Yeah, it's perfect. In fact, and this here, next one down, another Fibonacci level, right? Another Fibonacci level. Yes, I know. Why are they Fibonacci levels when Fibonacci levels are different percentages? All right, it's because I'm taking this stick and I'm moving it across this on this logarithmic chart, and I have the golden pocket drawn on, which lines up at $1, and you might not see that second dotted line, which is in there. So this is why this is another Fibonacci level. Here, do you see, if I zoom on in a bit, you might see it a bit more. You can see the dynamic. So when I explain, I'm not just a guy who's you know, off his Adderall or whatever, or taking, I don't know how that works. I'm not the guy with the million red pins and the string on the board and going, ooh, I'm crazy. I'm just using real rational stuff that takes about an hour to explain to people, with a concern that I want to read the messages people have sent me. I want to be complete and get it all out, because I do one show a week and I save all my energy for it, and afterwards I kind of just, I've got chronic fatigue, and this is my one spurt at it, and then I go into a crash and I just try and get it all out at once. And I know it's complicated, but you can watch the video twice. Anyway, these dynamics are real. Moves down this distance. If you go past the golden pocket, you're looking at more or less the same distance. The golden pocket straddles $1. There's a lot of technical stuff that's happening in there. The point being, if we move down here, the next test is going to be at that low, but that test will most likely fail. Okay, that's the reason, right? Because it will most likely go down to test off of not only that Fibonacci area, but as you can see, the next chunk down and represent a move which was the gap plus the liquidity move. It's that distance. This would be, if I just draw another one in, right? This is the, that was the, okay, so if I could click that. Okay, so that's that distance. It would take that distance and then pop that down here, and it would come down to test the low of the other island, because on the downward side, on the upside tests, it's like, all right, are you going to buy it again, is what the test is asking as the prices move up. Are you going to buy again? It's $1. are you going to buy it? If you don't, it's moving to 90 cents, right? And on the way down, a lot of the time, emotionally, let's face it, the test is kind of, are you going to sell it? And if you're going to short it, or if you're going to sell it down lower, and you break this area, and it's like, not only is it testing and asking from the, well, actually, see, this is the thing. I don't mean when prices have moved up, the test is. It's like, for prices to move up, that's what the test is. Are you going to buy it again? So it moves down to, it says like here, if it goes down to that area, are you going to buy it, or are you going to be too scared to buy it there? Because if you're too scared to buy it there, it's going to drop down to the next level. And if it, and too scared might not be the right word. It might be, are you trying to be that ruthless about your buying that you're going to do that? And then it also asks, are you going to sell it? You know, it's the same question every single time, right? And that would capitulate the market down. It would test that area. Where would it go to? It would go to test the area which was the low of the previous island, which is where a gap existed, where it was tested at before. Because back here, it moved up, and it said, and the market moved up, and it left this gap on, and then it came back down to test. And the question was, you know, for instance, are you going to buy it again? Because you bought it over there to create this gap. The prices have come back down to where the gap was created. So are you going to buy it again? Because that's the test. That's how tests work in markets. So what am I really trying to show you here? I'm trying to give you the narrative to understand how markets move between key areas of support and resistance. That's what this translates back to. Okay, key areas of support and resistance. I just had to take a second to write that out. How and why the market moves between key areas of support and resistance. That's what I've been teaching you without calling it that, because if I did, you'd get bored. Instead, I've told you about the concept of tests, and then I played it out in some real time. I had an idea to tell you about why the prices might move down to 80 cents. I wanted to show you in real-time technical analysis how markets move and conduct what is tests. I wanted to give you the narrative understanding that didn't rely on the cliche of bulls versus bears, that you could understand the conversation based on sentiment at the time, and based on risk, and based on where the person is most likely going to move their order to get that greedy deal that you're all looking for, which is a 3-star buy. Now, I linked it all together, and then I showed you that actually I'm teaching you about how and why markets move between the key areas of support and resistance and liquidity. And liquidity, that's what I should say. And liquidity. So for completeness, that's your lesson for today. And the point here is that failure to move up highs past this area is going to push the markets most likely down to retest this area, and I don't view it as being particularly negative. I view it as being a buy the dip. Why do I view that? Well, the reason for that is what the goal in today's chat was all about. Remember to hit like on this video if you do enjoy the content that I put out. Even if you don't understand the technical analysis or you don't even agree, just let me know if you're engaging with the content, because I do, I'm like I say, I'm a passionate guy. I want to see that back. So why? And it's to do with these ripples in the market. It's the ripples in the market, and it's to do with this idea of dilutions and too many shares. Okay, so what we have here is the reasons for the down are going to do with dilution. Dyspraxia for the win, and to do with this too many shares type narrative, because we have Linrock gets nearly 40%. And they're doing it because they looked at, I was supposed to try and do it with a picture of eyes kind of looking at 2026. I'm gonna have to try and fix this thing because it's really annoying me now. Anyway, 2026. I'm just talking about my scribbly screen. It's annoying me. They've looked at 2026 and the maturity for, and we'll just call it again with one of those little signs. We'll write the word C, letter C actually, circa. That's short for circa. It's Italian for close, or near, or around. 400 million. And the market cap of the company is about 1/4 of that. And they're looking at it and they're saying, well, it's 2025 now. So how are we going to get back some of our money, some of our 400 million? And they did it by getting 40% of the shares of the company. And then the idea then, the fear that exists to do with this word, which has got inverted commas around it because it's inaccurate, is to do with dump of their shares. It's a totally logical, rational thing to think. It's quite likely that they will sell some of their shares, quite likely. You know, it's got a business risk element to it. They'll have to think about burning the hands and so on, how they move forward. Maybe they need it for cash flow reasons at some point. Doesn't, you know, various different reasons, different things. They might not. They might sell. They might even dump all their shit. They might, right? But it wouldn't make any sense. It wouldn't make any rational sense. That might happen. I'm not going to say it's not going to happen. But we'll talk about why that makes no sense in just a second. It's part of the story. But that causes this fear, and that fear that they'll dump all their shares, and the word dilution, and just a few other things, right? Just all you need is a few other things to tip the scale. So what else can we add to the fire? It's like slow in sales. Oh my God, they're just so slow in the sales. They dropped. They didn't sign up less. They had less signed up less, like less. They had revised downward their end of year guidance, right? So we have these one major red flag reason, two major red flag reason, right? So these two major bearish dominoes can be brilliant triggers to send a series of 1 to 2 to 3 to drop the price down to 80 cents. 80 cents. Scary stuff, isn't it? But I'm saying it with a smile on my face because that is the buy the dip, right? That's the buy the dip. I mean, when I say 80 cents, like, go into the live person premium side room and we can all talk, like, you know, specific numbers and stuff like that. And I'm not calling specifically for a move to 80 cents. I am saying that there's a test here. If you look at my chart first, by the way, you know, I was saying that there's an idea of the test move up. I'm not blind to the fact it moved up past $1 to 104. That's a 4% move or more, you know, in today's market because the stock is so cheap. So like huge move up today, relatively speaking, following a big drop down. If it goes to test that area and can push above like 109 and so on, it could easily rise up. You can see various reasons. It could result in a test, and it could still even drop down 80 cents because the narrative exists. And because the narrative exists, they need to test it because everything's a test in the markets. Now, this narrative that exists is a bearish narrative, unfortunately, because people don't understand anything. They don't understand the reasons why it's a positive company to begin with. And then they hear these words and they look at those figures and they see the slowdown in sales and they see the revised end of year figures and they think, oh my goodness, and there's a word dilution, oh my goodness, and there's a stock. Are they doing this because they might not survive? Is that why they're doing this? That's what it looks like, and that might means that it needs to be tested. That narrative can't just pop up and be forgotten. It needs, right? Brilliant. If that then emerges, massive buy the dip. But of course, we have seen a big move up today. Momentum can easily carry it up, and people might catch on to the story too soon. We have a small audience here, so let's just get to the story of why the prices will actually go up after. Why would they go up after that? Because why up after? Yeah, you don't have to write all the letters in a word in order, folks, as you can see. Sometimes you can write the middle letter at the end. It's okay, so long as it's there. So why would the prices possibly go up after? And wow, that doesn't even look like it. So why would they go up after? It's to do with this story, right? So the fear of the dilution thing is actually that they bought these shares. Now you could say it was like 119 maybe they got them at, or somebody was saying maybe 75 cents they got them at, or whatever. But the thing is, in the way that this transaction happened, they had to forgive a massive amount of debt. Right, and that's like cool because they must have had that kind of signals in a lot of way either kind of panic or faith. And I'm leaning on faith, right? Because the story was good before, and there are other elements here that really back up why this is really great. Anyway, so we're going to go that it actually represents faith, and it's like, to what degree does it represent that faith? Well, if they were buying their shares, essentially, like, because the way the money happened, gave money to them, they forgave them some debt, the cash on hand is high, all this great stuff happened. They were paying $3 plus per share, right? $3 plus per share. So the basic sort of instinct is that to think that this sort of the too many shares narrative is kind of defeated by the fact that, yeah, they might sell some, but they're actually losing money on the deal they just did. They didn't need to do it, right? They also do know that the company's doing it all right, like we do. So they didn't need to do it. And in fact, doing it helps the company in some ways, we're going to talk about in a second. And so, they're helping the company in some ways. So it all sounds quite positive. They forgive lots of debt, actually. So why would they do that to then just dump the shares and then not be able to benefit from it, all of the shares? I mean, maybe if they do some, they might have some business need, whatever, some account, capital gains, depreciation, stuff like that. Great time to do things and accountancy reasons. I'm not going to get into the details. They can do that if they want to, Linrock. But they're losing money when it's below $3. Right? They're losing money when it's below $3. So like the price after the test, because the test should happen. And this is why if it doesn't happen, then it's a bit of a risk if the prices move up to 130, because they would make put in a lower high. If they move up to 125, right, 126, 127, and then they put in a lower high and drop down and test the dollar again, that 30% drop to the dollar is going to cause a cascade of fear that will result in this narrative, which has never been tested, if it doesn't get tested, probably ending up needing to be tested. So any taking your foot off the gas over the period next while then results in a drop down to test the story, test the narrative, and that's quite likely to test these various levels. And if they break, then they test the next one. And on the way down, there's the other question of, are you going to sell it again and short it, etc.? Are you going to move your orders till they buy them lower because you know that that's where the liquidity is? Because you could just buy at less riskier, higher price, or a riskier, lower price, but why not get the best deal? So this is how markets work. So after the test, is proposing that it happens first. It may not, right? Because we did see a drive up in price today. That's the background. After the test, you're looking for the prices to go up to $3 plus before Linrock want to start dumping them up in the market, because then they've wiped their face. And the reason that they would then have given this great deal is because it's more likely for the prices to go up to $3 so that they can sell it there. when their prices are higher, they'll have better liquidity too. So they'll be able to sell the price at higher. So how do they get the price up to $3? Well, they help the company out. And why then, brings us on to our next question, it's not really a dilution. Right? It's because they've swapped existential debt risk equity, right? Which has actually had a positive effect on balance sheet. And again, this is not a tinfoil show. I don't do tinfoil. There's no tinfoil here. So how is there no tinfoil? There's a 7 million minus 14, right? Versus, so there's a 7 million guidance for a positive net return on earnings before interest, for tax, dividend, whatever. Guidance is gone from negative 14 million, like at the low end, to 0 at the best. The best, highest end of their expectations and guidance before was that they would make nothing. And now they're going to make 7 million. You've also got, over time, the company is worth more because it's paying way less interest. So over time, it's worth more. So when it gets more likely to get back to $3 than perhaps it was before in that way, and Linrock are then more likely to get their money back because the price is more likely to go to an area that they can sell at to get that liquidity than taking it from the company that they believe in, and let's assume that they'd still want to own some. Say they want to own 10%, but they happen to own 40%. What are they going to do? Cut off their own nose to spite their face? Well, I mean, that phrase doesn't properly... No, why would they even do that? I mean, so it's so absurd. Yeah, no, they wouldn't do that. Unless they had their own existential risk. Like, say they had somebody calling up that they needed to pay somebody else 100 million, and they're like, oh God, we really just got to take a haircut on this. But they don't, right? At least, and like, I mean, it's to my best. Like, again, do your own research, right? And anything can happen. I'm not a financial advisor. Maybe they do. I'm not. Anything that I said in this story, in this whole show, is not advisory or tax or investment advice. It's just me telling you my opinion in a great interactive show. Right, great. So I've explained that. I've explained then why the price would go back to up afterwards. However, you would think to yourself then, why test at all? That's the question. Why test at all? And that's a question, right? That's a valid question. It's a valid question. It's a valid question you might be asking me right now. And I'm telling you that everything is a test. Everything. So you might think it's redundant to test it if you're sure. And I'm trying to tell you that when you get more advanced in investing, you'll understand that the redundant thing is asking this question, because everything is a test. If this was a microphone, I would drop it and end, but we've actually got the messages that have come in from people on today's show. You probably want to watch this one twice. Let's just see. Right, so Ibugi did an hour ago, said, cheers Rocky, and tipped me $10. That's amazing. Thanks, pal. And we had, let me just see here. The fan funding here. We had Go Into Win being a member for a while. Merrick earlier on saying, hey, Rocky. Merrick was a member for 39 months, man. Hey, man, it's good to see you, Merrick, man. It's quality. LPSN to the Moon and Beyond from Riley Gregg, who's been an early supporter for the last 5 months. That's cool for supporting the channel and everybody. XD looking for Lipson. Ubugi wanted to take part in the story. Well, we did that. If you liked it and you enjoyed it, let me know. It's pretty good, I think. Merrick man, Merrick, wow, you'd really pushed us towards that goal. I have to say, everybody in the audience should give Merrick a big round of applause there for really pushing us towards that goal, because look at that, he carried a lot of that himself. Luke Spears, member for 50 months. If you have time, Rocky, would be curious to see your take on SPY, especially RE Jamie's theory that we could be in for a big retrace, weekly RSI target 69. Yeah, right. I don't disagree. All right, I don't disagree with Jimmy's analysis, but we'll take a look at SPY in just a second before we wrap up the show. Like I said, I'm going to do all the stuff that people have said in the messages. Okay, I'm going to do it all. Just a second, I suppose. If I take this over here, pop it here. Like that. All right, cool. You can see what I'm doing. Sorry. So just a sec. So this was Merrick supporting the channel, loads and stuff. We had these other requests. This is all that. Only shares. Thanks for that. 100,000 years of darkness as well. TSF as well. So yeah, if you wanted to ask about SPY, yeah, we could take a look at that. Hello from LPSN side, free side for you, Rocky. Hello, John Jim, thanks so much. Googleplex in there. Cheers. $5 worth of LPSN shares or $5 of coffee every day. That is a good question, man. Wonder what what the future discounted coffee flow. That's what the economic term for that would be. You should look into those CDFFs. No, whatever. Greetings from Rhino. Would you take a peek at CIFR and provide your thoughts? I like it a lot. 6 to 12 months. SPY and CIFR. Let's take a look at those two. 6 to 12 months options look sexy. I would like the $3 Ranger, but holds that 200 SMA. Looks solid. Okay, cool. Got a job at a machine shop. Can you do Workhorse? Space Cadet says Workhorse. We could take a look at Workhorse, I suppose. Thanks for your effort, Rocky. And hi, Rocky. Talking of tests, what do you think of Sophie will do with this test of near all-time high? Working backwards, Sophie, there's the all-time high. There's the all-time high. 15-minute chart. High has come up here. Had to test that, right? You had to test. That's where the bears come in at, of course. But managed to maintain this clear, bit of a frozen rope, a bit of a breakout attempt. That's here. This gives you a nice little clear idea, by the way. This breakout attempt, as you'll notice, same range inside here. It's hardly a coincidence. Move back down here to retest this area, and yeah. So what do I think? Well, the trend is still on, right? I would absolutely have my stop losses at $23, right? I'm not a financial advisor, no, it's financial advice, but breaking below that area puts the brakes on for a split second here at least. Possibly, right? So that's an easy way to think about things. This move up that happened does reflect the same sort of distance between these 2 points, and I think that that's okay to come back down and retest that area, and yeah. So there's no necessarily a reason to give up on the trend just yet, but this is a clear sign that there's a change in the open interest, and you could see a move down even that. A break of that represents at least that amount of a move. So that totally doable. Parkside, right, Parkside there. It's like, okay, cool. So we're going back away.
We're buying live person at 80 cents.
80 cents is the thing, yeah.
80 cents. So everyone's thinking 80 cents. Everyone's going to probably put their order in at around 80 cents. About 80 cents.
Yeah, those words are that.
80 cents. That's what you think. Everyone, 80 cents.
Jimmy's saying some prices there. This is prices.
It's a range really between 80 cents and 80 cents, where everyone will probably end up putting an order.
Mm-hmm.
Like everyone.
Well, this here's CIFR stock. You can see for the range up here, it's almost certainly got a big Fibonacci retest of some zones in here. Well worth taking a peek at what has happened against that trend. Down here, yeah, so floating around about a 50% area currently. That's a clear thing. This is a Dow classic retest here, Dow theory again. with the 50%. Flipping this is positive. Obviously, this downward trend here looks like it's been an attempt to break out of it. This triangle is worth noting. Movement down outside of it takes us to retest the golden pocket, and a move to test the 886 would be to test that gap. So this breakout gap here that exists on the charts, a move to test that, is it likely? I mean, it's sitting there at still probably about a 40% likeliness that the price actually does make it there overall. So it's relatively high risk to reward, but at the same time, nice area to be looking at it with the potential to move outside of that. First step on a breakout from this takes you back up to challenge the prior highs, and then you could be doing very well. The more prudent traders might look to try and wait and see that above this area becomes a buy, below it, this area absolutely becomes a sell, and you might not want to trade in here. You might that might be considered chop and a no trade zone for some people depending on their investment horizon. So that's a pretty cool one. A little suggestion from someone. We had other messages that come in the meantime, by the way. I'll make my way back over and not miss them. Oh, I spy. So SPX, right? I'm going to go SPX. This is where I had all my crap from before. So this, could it be? Well, this is just what's this 15-minute time frame. That's almost certainly got yeah. So like there you go. This recent high is and that's not bearish diversion. It's not. Yeah, no, they're pretty decent. There was so much bearish divergence there. The hidden bullish is good until, you know, when you get lows that are coming down that are not got hidden bullish divergence on them, then I'd start to get bearish on it. In the all-time high territory, coming back down to do any retest of the prior all-time highs is like, you know, just simply retest of it. The trend continues to move up here, so it's obviously come to a higher risk area, options and so on, to have not taken profit on them when the potential for a test of anything within this range being so high is, you know, well, I mean, you might be hoping for the best. I did that upside down. That's maybe the first time I've done that in 5, 7, 10, I don't know what years. So move down here. It could happen. Could happen. Staying positive on it. Wow, like yeah. So look at that. The 236 lines up with the prior high. So this is just like what I was talking about with the looking at the total market cap, right? What did I say on the total coin? If you can remember from before, I'm not going to add any text there. What did you see on what I said on the total market cap chart for crypto? I said as long as it's above this prior high, I'm just going to stay bullish on it. So I'll stay bullish while it's above 6,420. Nice number. And if it's so I'll stay bullish on it, but momentum could start to flag. Retest of the center line just there. Yeah. This could easily set up for a thing. Let's just check the different time frames in case there's something cleaner. Aye, so you're set up for bearish divergence at a high here with this move that could ultimately create a bigger drop. But the volatility recently causing the market to do tests and then recover afterwards is very good because it's much healthier. So actually, Jamie's prediction of a big retrace down to that way made a lot more sense before the market managed to maintain its all-time highs. And the conversation about that move has to happen after a drop down past that significant barrier. So like everything in between is just short-term trading, and you'd be foolish to trade against the trend. Jamie would tell you that himself. But so you'd be looking for a move below 6,200 before you start thinking about how beautiful some short option would be for a potential 67% retrace, right? How about that as a nice framing of the conversation? And I think there was one other that came in here just as we were chatting, possibly. Let me see here. Sophie, going above and beyond in analysis. Cheers, Jay Hunter. That's appreciated. And Tidy Cogs, thanks so much, Rocky. Cooler, set cooling off again. Earnings tomorrow, ready for a pop. Let's take a look at KULR. And it's... Yeah, right. So, by the way, folks, as I said, the options, etc., looking pretty good on that CIFR chart, right? And it's just simply as a reminder, like when you're at that type of an area, a breakdown below can cause movements down to test what? This is a gap. Look at that, right? So I said that there could be a move down in CIFR of 80%, so the 886, sorry, relative within the range move to down to that, to test something such as what we saw here. So it makes perfect sense when you see that. Putting the how every road leads to Rome part of analysis together, so you can see how this all functions. We've had a test of the golden pocket there, break that, and you'll move down towards the 886. But we've had that golden pocket test. It is a test of a gap that existed. Makes risk management super easy on people who are getting into positions now, because naturally you can have extremely easy to manage position here with high risk reward payoffs at times when people feel like that is what could happen. But retest the bottom of the gap, so then you start to think, oh, then I have to be a bit more or less, where would you draw that risk management in? If it took out that area, well, that's actually where to go to. So you've got this big chunk of risk. Buying it as it's saying to yourself, well, if it breaks a structural area after testing the lower end of a gap, presents a much lower risk entry, equally moves up above prior highs where there is another gap there, if you do believe in a move very much higher, is prudent. If I just move this to the side for a second, everybody benefits from this lesson here just real quick. This is what a downward trend looks like here. I got a downward trend, and in moves where if you said to yourself, oh, and I don't believe in that, it's not starting to trend up now, this is the anticipated move, like this is anticipated type of crap, right? If it moves up and then fails, then it goes back to continue the downward trend. Okay, so if you think to yourself that the risk to reward on this trade is not worth getting in at this point, you say it's not worth getting in at this point because the upside is so much lower, because you would rather get in down here for the move up here, you're ignoring the fundamental way that markets work. You'd be taking a trade which actually should have a sell somewhere, actually that's way too high, should have a sell in at that area, right? So then what happens is you see that your trade at one point did make it into a big move up. You'd made it into profit. You'd almost made 100%. Your options are flying. You're brilliant. And then it comes back down, and then it gets stopped out, all right? Because that happened, right? So if you're trading and you're conflating your trading styles, and that is why these things. That's why everybody goes wrong in markets, alongside position size and problems, and a lack of understanding of theta decay on options. Right. So we know that this is a downward trend, but if it breaks that area, you could actually get a lower risk trade if you wanted to do that. Taking a trade here requires you to manage your risk tightly, and you'd rather have 2 or 3 trades with a couple that didn't work than have your account get liquidated. That's the end of the story. If we got any more, if we do have any more, they probably didn't quite make it across the line. Right, so we did well there. Let's check my other thing. We're doing well there. How long's the show? 1 hour and 20 minutes. Still incredible value. Everybody's having a great time. Just check in on the regular chat box, folks, here. So this is happening live. And you're the greatest audience in the world, even if you don't even know it. Cheers, Rocky. Can you remember your past the hour mark? Yes, cheers, pal. Thanks very much. Thanks so much. Yeah, these hearts here that I'm putting on these two, they're symbolic to everybody that put a heart on. Like, just go up here and stick on. I can't. You can. I love that. Thanks so much. Sunny Sun, love you right back, Sunny Sun. Look at that, we love each other. My health at the minute, not the best, right? I'm going to be honest with you, my health at the minute, not the best. And my energy levels, not the best, right? And this is a real kind of mining of all of my, collecting all my energy to push it out into this 1 hour. And I just want to say I really appreciate everybody that tunes in. It's part of what we do. And I'll up my engagement as and when I can across all different platforms, and I will of course keep everybody in the front of my mind every time. And when I look at the charts and I see that they're doing what I said they're doing, I'm thinking, I'm with people. They're riding a wave along with me, and it's creating success and putting out good ripples into the world. And I want to thank you for giving me that opportunity. Let's do this. See you next time. Parkside boys. I'm just saying Parkside boys now. Parkside boys.
Oh, Parkside boys. Parkside boys. Parkside boys. 80 cents.
80 cents. Yeah, that's the thing.
That's a good thing.
80 cents buying
that's the
things.
thing.
That's the thing.
That's the thing.
That's what I'm
80
looking
cents,
for.
That's the thing.
And,
that's the thing. 80 cents.
And the crypto, I didn't make predictions. I was going to make predictions. I'll just have to look at it. You'll just have to look at the
14.9 Cody.
You'll just have to join the
7,
Discord
9, 11,
and I'll put
14.
some predictions in the premium
Ethereum, 5,000,
crypto rooms.
6,000, 7,800.
Right.
Parkside boys.